Good morning. Thank you for taking the time to listen to us today. My name is John Felicite from Caoilfhionn. I'm a commercial director responsible for business development into Africa. I'm joined today by Caoilfhionn van der Veld from Regan van Roy and Robin Mardemootoo from Dentons. Caoilfhionn, please could you tell us a little bit about yourself and Regan van Roy?
Great to be here, John. Thanks for having me. So I'm Caoilfhionn van der Veld. I'm the managing partner of Regan van Roy. We're a boutique tax firm focused purely on Africa, and we help African businesses internationalize and international businesses come into Africa. I'm from Ireland originally, but I've been in beautiful Mauritius now for almost 7 years.
Thank you very much. Robin, may I ask you to introduce yourself, please?
Yes, well, first of all, thank you for having me. I'm the managing partner for Dentons in Mauritius. Dentons, as you know, is a global law firm. We have great projects for Africa, and my personal interest is to accompany investors from the US and from Europe and Asia into Africa through Mauritius.
Thank you both. Thank you, Robin. Maybe if I can start, Caoilfhionn, I'd just like to ask you, what do you think makes Mauritius such an attractive financial centre?
So anyone who's looking for a financial center, or let's say an intermediary holding location for their business, is looking for a safe, stable environment that will de-risk their business in various ways. So tax is obviously one of them. So from a tax perspective, when you're looking at an offshore finance center, you want to have minimal taxes on your foreign income receipts like dividends, and you want to have minimal or no taxes on your flows out. So if you're a holding company, you want to be able to receive dividends very tax efficiently and pay them up to your parent, to your shareholder, with no tax. So Mauritius gives all of those. It also gives a lot of financial and sovereign stability, particularly where you have a business investing in Africa, where sovereign risk is a real issue. So Mauritius has had very stable government for many years, stable legal regime, stable accounting regime, good banking infrastructure. All of those things help de-risk any African business if you have a holding entity here that kind of draws up your African subsidiaries flows and provides operations from here. In addition to the kind of tax and sovereign risk elements, Mauritius also has no exchange controls, and anyone operating in Africa knows that exchange controls is a very real risk. So it doesn't matter if you make loads of profit in Nigeria if you can't actually take it out of the country. And almost all African countries have exchange controls in one form or the other. Mauritius doesn't, so it's got free access of capital and an excellent banking infrastructure to facilitate that. In addition, Mauritius, although it's a small country, it's got lots of highly qualified personnel, so it's easy to find good people here to support your African business plans.
Wonderful, thank you. Robin, can I ask you, please, how do you think Mauritius has actually evolved over the years as an offshore financial centre?
Well, you know, so it already started in the early 1990s when Mauritius basically when the guaranteed quota and price on sugar expired, and the island had to find another source of revenue. So this is when they came up with developing the financial center, early 1990s. So from those years up to now, you can see the evolution. We evolved from, you know, being referred to as your regular traditional offshore jurisdiction to what we are today, which is a financial center of substance. I think there is a fundamental difference between your volcanic rock tax haven, which we are not, and the jurisdiction that we are today. And today we are a place of substance. There are other things going on in Mauritius other than just financial services, and that is the beauty of it. And there's real trade, real business going on, and which, like Singapore, Mauritius today is a place where people are coming in and setting up their regional headquarters, which reinforces the substance element. So, answering your question, evolution of Mauritius, I think Mauritius has done very well, as Keelan said, supported by really strong stability, political stability. There's never been any political problems in Mauritius. The jurisdiction is very safe, and this is what people look for.
Thank you very much, Robin. Brings me on to my next question in terms of the definition of what Mauritius is. I mean, I've heard people talk about it as an international financial centre, and I always ask myself, should it be really sort of known as an African business hub? Because there are so many international financial centres around the world. And I suppose my next question to you, Keelan, would be, how does Mauritius differ, and how is it positioned compared to other financial centres?
It's a good question, and I really like Robin's discussion there of the evolution of Mauritius, and I like that phrase. It's not a volcanic island. There's a lot of well, let's say the evolution of Mauritius is in line with the evolution of the whole concept of an international financial centre. 20 years ago, there were these volcanic island tax havens, and that's what they were. Nothing happened there. You just had your postbox entity there, and you save loads of tax. Those days are gone, and since the OECD BEPS initiative in particular, it is no longer possible or feasible to set up in an offshore jurisdiction without real substance. So that's one of the reasons Mauritius differentiates itself from, let's say, offshore centres where really there's no real local market, there's no personnel, there's nothing happening except these beneficial tax regimes. And that's why I think Mauritius is more than just an international finance centre, the way so many of these islands in the middle of nowhere are. It has a flourishing economy, it's got an excellent banking infrastructure, and it's got the ability and the regulatory framework and the tax dispensations to be able to provide real meaningful services for African businesses. So a lot of our clients would have Pan-African businesses of various sorts, let's say in telecoms or fintech or some sort of microlending, for instance, and it makes sense for them to provide the key services from Mauritius, leveraging off the banking infrastructure, the high quality workforce that is here, and providing the services across all of their subsidiaries from here. So I would agree with you. It could also be known as a service center for Africa. I mean, I don't like the term offshore financial center anyway. It used to be that people would say an offshore tax haven. Now, and it used 20 years ago, it would be good to include an offshore tax haven in your company report. Now the tide has totally changed, and tax haven is a bad word. Yeah. International finance center is the new word. I don't really like that lingo, because there's so much more to Mauritius than just an offshore holdco for tax purposes.
Exactly. Personally, I like the actual phrase African business hub, because there's so much more to Mauritius, as we both mentioned, in terms of the actual spread of the actual different sectors that are actually available here. It's not just about financial services, although that's very important to Mauritius and the economic growth of Mauritius. There are many other sectors: tourism, textiles, construction, hospitality, fintech as well. So that makes it more than just a typical financial centre that I can think of.
Yeah. I mean, I always like the term gateway to Africa. It's a bit naff, but it is a very nice location to have your head office, your group support functions, and extend into various African countries from Mauritius.
Yeah, we are going to come back to that point in terms of being the gateway. But coming back to you, Robin, just in terms of the regulatory landscape in Mauritius, please, can you tell us a bit more about who the regulators are, how they connect, how they are accessible to people considering using Mauritius?
just to pick up on what Caoilfhionn said about offshore tax and the appellation, the use of the word. In fairness to Mauritius, we've identified since 2001, as far as there, I mean, 23 years ago, that we were not an offshore tax haven.
Yeah.
And we Mauritius enacted the Financial Services Development Act of 2001 to delete the reference to offshore bank, offshore account, offshore company. Section 17B, famous section, does away with offshore reference and brings in global business.
Yeah.
And so, you know, so 25 years now, and so that's really firmly settled in. Regulatory framework, financial services and, banking services and non-banking. Banking services, you've got the Bank of Mauritius, which is the central bank, and which is responsible for everything for banks and banking. And then non-banking, Financial Services Commission, FSC. Again, we've evolved because to avoid duplicity, to avoid miscommunication, there is now a common leadership between those two fundamental regulators, between banking and non-banking, and you know, I mean, that was a big recommendation by the FATF, that agencies talk to each other.
Sure.
And recommendation number 2 of FATF recommendations call for that. And I'm glad in Mauritius, banking and non-banking have one voice. And so you've got Bank of Mauritius, you've got Financial Services Commission, and then you've got Financial Intelligence Unit, FIU, which is the law enforcement agency, information collector for financial and banking services. Again, this came and its role has really been under the spotlight as a result of all the commitments we made before the SMLAG and before the FATF.
Thank you, Robbie. I suppose one of the other questions I'd like you to just talk a bit about is, just for the benefit of our audience, how robust is the legal system in Mauritius? How transparent is it? These are questions that I'm sometimes asked from potential clients before considering Mauritius as a jurisdiction, as a platform for Africa. You know, is it tried and tested? What happens if something goes wrong? How robust is the legal system? Can they find solutions?
Oh, very robust. You know, Mauritius has a mixed legal system, a little bit like Scotland, a little bit like Quebec, where you've got a beautiful combination of civil tradition and common law tradition. Mauritius being a French colony at the beginning, so we have our French civil code, which was imported into Mauritius, which is known as the Code Napoleon, and which has become the Mauritian civil code, and which is still here, 1804. So that shows you the stability in terms of the legal regime governing Mauritius. This is the private law of Mauritius. This is the common law of Mauritius, 1804. Of course, we've had amendments to align ourselves with societal evolution, but very stable. So we've got the civil code. Then you've got we became independent in 1968, and we became a British colony before that in 1810. So when Brits took over, then this is when we started to have English law instruments. And so after the independence, we kept the French heritage, the British heritage, and then we started to create our own Mauritian law based on French and English traditions, which themselves were based on which area of the law we're picking. So we would have new civil law instruments based on the civil code, for example, new corporate law instruments based on the a common law system, with the result that it offers great visibility and great predictability in terms of rule of law is concerned. And Mauritius has always been looking around and looking for best practices, even though we are sovereign and independent. The author of our Companies Act is Professor Mackenzie from New Zealand, and our Insolvency Act inspired from Australian Companies Act. Our anti-corruption legislation inspired from Hong Kong. So we've got research, we've got experts worldwide, world-renowned experts coming in and beefing up our legislative framework all the time. Now, how robust is our legal? It would be a waste to have a beautiful legal framework without enforcement. Let me remind you, our top court is the Judicial Committee of the Privy Council. We are the only country in Africa with the Privy Council as our cassation court, if you will. That, to me, is a game changer, because of course we are sovereign. Of course I am a proud Mauritian of an independent nation. That has nothing to do with the role that the Judicial Committee plays in our system, because because England comes with centuries of legal maturity, centuries of legal traditions, and by the rulings that we've had, quashing Supreme Court of Mauritius judgments, I am comforted that we have that system. And you know what? It gives foreign investors a fundamental comfort that at the end of the day, it will be the set of most senior English judges who would interpret the law and who would apply the law. And you know, I mean, English judges from the English Supreme Court are the one who trains judges of the U.S. Supreme Court.
Right. Okay.
Very often, you've got U.S. Supreme Court judges coming in England for training and vice versa. So I think this is fantastic for Mauritius to have. I think we should never get rid of this system. And so, answering your question, robust legal regime, legal framework, and robust enforcement of Mauritian law.
Thank you, Robin. In terms of obviously changing dynamics of finance, in terms of fintech, in terms of AI, in terms of new developments across all different laws, how does Mauritius position itself to ensure that it remains at the highest level of international standards? You've touched upon about how we engaged with New Zealand and Australia in the past, but in terms of, for example, Bitcoin, cryptocurrencies, how do we look at the laws of other countries to bring best practice to Mauritius?
Well, again, same thing. We've hired the best experts in the field to come and help us with writing our legislation, and we've got very good and updated legislation on virtual assets, and you know, it's not just about writing laws. We must be aligned in terms of our enforcement and supervision. We must be aligned with how society evolves. So recommendation 15 of FATF, we have now in all of our monitoring of AML CFT regulations, recommendation 15 wants us to monitor the upcoming of virtual assets and to ensure that people do not use virtual assets for money laundering and financing of terrorism. So we've done all that. We have the framework. We've got the enforcement agency trained and well able to look after all that stuff.
Thank you, Robin. Over to you, Caoilfhionn. In terms of just leveraging from what Robin's just mentioned about the regulatory framework, the landscape, in terms of the tax advantages of Mauritius, could you just talk a little bit about what those tax advantages are for people looking to consider this as as a platform?
Sure. So, and one of the things we always tell our clients, whether they're African business owners wanting to de-risk by setting up an international structure, or inbound investors wanting to de-risk their African investments via Mauritian structure, tax is only part of the benefits you look to when you look at using a place like Mauritius. So the key elements are always reducing country risk, and I completely echo what Robin has said. And the fact that Mauritius is the only African country that is ultimately beholden to the Privy Council, that should give huge comfort to anyone doing a large-scale investment in Africa. I mean, the kind of sovereign frameworks that we have are unparalleled in Africa. There's also the sovereign risk is a very real risk in Africa, like the risk of nationalization or a sudden change of government where all the rules are thrown up in the air. And that's often the biggest risk inbound investment have, especially if they're doing a capital intensive project. So using Mauritius and perhaps owning the assets via Mauritius, or else availing of one of Mauritius's bilateral investment treaties or IPPAs, can significantly de-risk that, tied in with the legal system we have here to underpin that. There's also the fact that Mauritius is pretty much the only African country where you can transact in hard currency. So you can have a US dollar, a sterling, a euro account and business run in Mauritius. In the rest of the African countries, you always have to convert back to your home currency. And currency risk is a very real risk in all African countries. I would say it's a very volatile currency base. In addition to that is exchange control. So the ability to actually bring your money out of African countries is a very real issue. Mauritius has none of those. So in terms of sovereign risk, currency risk, exchange control risk, having let's say an intermediary holding company or a services vehicle in Mauritius gives you substantial mitigation of those risks. Then tax is in addition to that. And again, I totally echo what Robin has said. I think Mauritius has done a very good job in turning itself, in not being seen as just a tax haven, because the days of tax havens are really gone. Mauritius is looking at giving the risk mitigation benefits in addition to, let's say, tax optimization. So the general tax benefits you get in Mauritius are, first of all, generally a stable regime. So when you're looking at a very expensive project, often you don't want to pay the least amount of tax possible, but you want tax stability. So you want to know that whatever you sign up for is not going to change. So Mauritius, there's obviously been little tweaks over the years, but generally it's a very stable tax regime. The headline tax rate is 15%, but there's a lot of different exemptions, which often bring the effective rate down to 3%. Again, Mauritius has had to tweak the way it offers those benefits to stay on the right side of, in particular, the OECD the EU Tax Commission and the OECD BEPS initiative that was really been trying to shut down global tax benefits. So the OECD hates any country giving a special dispensation to foreign investment and a different one to local, which is why we've had quite significant changes in Mauritius over the last 8 years or so to ensure we remain on the right side of the OECD regulations. But although the methods have changed, we still have a situation where a lot of income can be subject to 3%. So in particular, dividend receipts. And Mauritius has a very, very generous double taxation regime, which means essentially if you're operating in Africa, you're always operating with a high tax country. So you're always going to get the full tax benefit in Mauritius. So whatever you're receiving from Africa, at the end of the day, will probably have close to zero taxation because of the low effective rates and the high double taxation relief that's available. There's also a number of tax holidays which are to facilitate business expansion in Mauritius. So the one is the global headquarter tax holiday, which is a 10-year tax holiday for any business that sets up a global headquarters here. There's certain conditions, including having 10 staff in Mauritius, but that's a very generous tax holiday. There's also tax holidays relating to the development of IP, to fintech, to specific agri-type operations. And then I think the another tax benefit is the low personal tax rate. So lots of offshore finance centers like Ireland, like Luxembourg, they have low corporate taxes, but very high personal tax rates, which means the cost of doing business is higher. So for instance, in Ireland, where I'm from, even though there's a 15% tax rate, the highest band of personal tax is 53%. In Mauritius, the highest band is essentially 20%, although there's been some changes recently. And then a final word on the tax benefits in Mauritius is the very low withholding taxes on flows from Mauritius. So no dividend withholding tax in most cases, no withholding tax on interest or royalties either.
Fantastic. Thank you very much, Caoilhionn. I'm glad that some of the substance actual requirements do have some other benefits as well, particularly in terms of the actual tax holidays. So bringing people here isn't necessarily a bad thing.
And if I can add to that, John, so I always think if anyone who moans about the substance requirements of a country like Mauritius are completely missing the point. Substance nowadays is the key to optimizing your global tax framework. And not so much in terms of ensuring you tick the box from the Mauritius side, but in terms of your global transfer pricing framework. Transfer pricing is now underpins everything in tax, and that entirely depends on what substance you have where. So really the name of the game is having more substance in a country where you can operate with minimal risk and with a beneficial tax regime, because that will improve your overall business framework and support the transfer pricing of the various intragroup transactions you have.
Super. Thank you so much. Thank you very much for that, Caoilhionn. Back over to you now, Robin. Great if you could just share with us some examples of some of the structures that you're seeing requested from the clients that you work with. What are they looking for, and how do you help them?
We haven't seen any change. Mauritius offers a set of entities that has traditionally been used and which continue to be used. There are some tweaking here and there, but for the most of it, you've got your regular private public companies limited by shares. You've got your limited liability partnerships. Then you've got your trust foundations. You've got PCCs and VCCs. We started with PCCs, which are, PCCs and VCCs are your umbrella type of structures that allow the entity to branch out and do various activities. But however, we soon realized that it had its limits, because the various cells under the PCC could not venture into other fields other than what the PCC was licensed for. And the PCC cells, didn't have separate legal personality. And there have been some risk associated with liabilities, cross cells. So then we've developed the VCC, which is still an umbrella structure, but allowing the cells to venture out and operate their own completely different activities and hold completely different licenses from each other. And this, in fact, suits today's world much better. So these are your types of structures that have been common in Mauritius, and with the VCC now coming into play, that's what we're seeing. Of course, combined with LLPs, American investors still like their LP GP structures, so that's also available. In terms of licensing, You've got your regular license, investment holding, that is, that has been there for a long time. And then you've got a whole array of specific license, which have specific licenses which have specific regimes attached to them. More and more, we are having the collective investment schemes. We've seen a big shift in this. As at mid 2024, I think Mauritius counted about 1,000 of collective investment schemes, and we've evolved with time. Usually, before it used to be just your regular private equity. Today we've got the global structure for retail investors. You've got professional collective investment schemes.
Yes.
For your private placements. You've got expert funds. And Mauritius is keeping up, because the more professional, the more expert, the more sophisticated the investors are, the lesser the need for disclosure, the lesser the need for application of the regulations. They need less protection because they are sophisticated by nature. So this comes in line with European and American regulations.
Absolutely. I think we've seen a big influx of VC type vehicles over the past 3 years. Not a decline in LPGP, typical private equity, but certainly more private credit, more VC vehicles coming in. I think the VCC that you mentioned has been very, very attractive for Mauritius. One of only, I think, 2 jurisdictions in the world that really operate it. But actually, it allows for those people or those groups that are able to have multiple fund strategies operate under one regulatory umbrella, which is obviously cost effective, cost efficient, and obviously very secure for the investors as well through that segregation of separate legal entities.
Yeah.